So we got a little bit of a shakeout today in the marketplace. So is it time to buy the dip after one day, or is it time to sell the rip after one day? We're going to look at three charts. I'm going to walk through three charts. And on the last chart, I'm going to show you an interesting $3 million bet that was placed that is bullish going into the end of the year here. And it's not in the US market. It's in one of the old BRIC markets, the BRIC. It's an old acronym if you're familiar with it, but we'll take a look at that. First, let's take a look here at the SPY, and this is a monthly chart that we're looking at here. So when we look at candlesticks, or when you're looking at data, which is what it is at the end of the day, we're just looking at data and we're aggregating it. Monthlies are going to have more dominance than dailies. So when we look at the last 20 years, we look at this, and the market has just been ripping higher. And you can see why everyone believes that the market just goes higher here. But the thing to keep in mind here is when we get into these bands here, which we've been writing here, we really haven't seen a significant pullback. The last one was back in September of 2019, and we backed off those. So every time you look previously to the left here, we do typically back off, except for this big run here that we had in 2017, where the market just kind of inched higher, 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 then eventually pulls back after a big pop off and so forth. So that's what I would assume. My prediction going in the next month, couple months here is if this isn't the pop off here, the top for a pullback, we're going to grind higher into there, and then we probably see a pullback into this 380 area. Probably that's where we went back before, right to this moving average, and that's where we could see here. So when we talk about this kind of stuff, it's just, hey, how are you managing your other investments? How are you managing your stocks? Take profits off the table, manage that risk, and potentially look to buy on a pullback, more of a pullback. Look for things to get a little bit more shaky, lock up some of that money, and go from there. So when we look at that, that's the thing that we keep in mind here. You're never going to pick the top. It doesn't really matter. You pick the top, it's putting money in the bank. How are you going to put money in the bank? That's what matters here. So we're going to look at the VIX. The second chart we're going to look at is the VIX. And we saw in the VIX here, we got a little bit of some action today. It popped off, but then came back in here. So that's interesting when we see this, is that it wasn't able to hold. So that fear that came in the marketplace, we saw that pick up and then all of a sudden kind of subside. And that's interesting to note because that increased premiums and then brought them back down. Your trading options, you get this is very choppy on the premium side if you're buying options. So probably why if you're trading options, why you saw some fluctuations in your pricing and wasn't too aware of. So what we're looking at here, we printed it back into 15 here. Now we're starting to kind of we're not getting that aggressive big spikes up and down, but we're starting to see what we see here. You could call it a rounded bottom, but it's almost a kind of a shift. And right now things are a little bit more volatile, probably and partially because of earnings season here, but we are starting to see some things on the horizon here. When is the the great reopening for the United States? When is that the sell-off? Because it's going to happen. All we've heard for the last year is the great reopening, great reopening. Well, once that happens, that's an event that you sell into, and we're starting to see that with some of the blue states. New York announced, I think it was last week or the week before, July 1st is going to be their reopening. Back to full, and Illinois and Chicago just released this morning that they are shooting for July 1st as well. So the states that were heavily locked down, had a lot of restrictions, are starting to push out there that things are going to reopening, or things are going to be fully open in July. So once that happens, when does that sell the event? That's what we have to look forward to and look at, because everything that's happened before has been money pushed into the system here, and there's nothing new. I mean, there's more. We have jobless claims that are at records, and we have inflation that is so prevalent in housing and lumber and all this other stuff that it's going to come back to roost. We have a lot of things to overcome in the years and decades to come, but right now we're just looking for the next 3 months, where I think we see that move higher and then that potential pullback. So the third chart I got for you is in the RSX. It's the ETF for Russia, and it's an interesting one because what I saw today was a $3 million bet, which I'll show you here in a second. And I typically ignore ETF activities such as this, but this stuck out so much like a sore thumb that it's hard to ignore. It's about it's a 200% increase in overall option volume, and it's dominated in the January contract here. And it was just interesting to see when I take a look here is that Russia is just right off of its 2021 highs here. And when we start to think about what's happening in the U.S. and how that could benefit Russia, you kind of start to think things out and how it could really benefit Russia going forward. Let's take a look here at that trade that was in the January contract. It has 262 days to expire, and this is what I'm talking about here. 13,000 contracts traded, 13,000.4 to be exact, and this was in the January 27 strike, and the bulk of them were purchased at $2. Now, this was traded off floor, meaning that they called a broker, but this was an opening purchase here. It's hard to know with ETFs because how ETFs are created. I would have to assume that this is a buy. This is a directional buy here, and someone's putting up nearly $3 million to have this bullish bet for the next 262 days on Russia. Kind of an interesting trade here to keep in mind. Now, it's not for everyone here, but when we start to think about things that could be happening on the macro scale, this is where a fund, an institution, did some homework and has a pretty high conviction of that the RSX is a good opportunity to have exposure to Russia through this ETF for prices to go higher here. So those are 3 charts I have for you today. Now, it may not be time to sell the RIP just yet, but it's coming. So keep an eye on that, and I'll see you in the next video.